Welcome to TradeNBA.com. This is John's reports for the 29th. And well, we made some new highs as expected with the move up. We're seeing a little bit of fill back into that. And a pretty decent sharp spike here at NBI White. So shorts getting active as we break into the new highs. Still pretty clean though, with cyan under red and uh, continued move of DOC green over. So that crossover and that spread proving very effective. Shakeout continuing to rise, so we're getting some normal movement, within that breakout. Most of it's taking place in the European session, as we'll see in the intraday. From an NQ standpoint, also was a decent move back up, but already filled back more than half of it within that range, and much closer from that MBI white to magenta, and right at the 25 level. So, from a Nasdaq standpoint, you can see the weakness definitely clear. Is it just barely getting over the positive shakeout? So, those kind of differences we look at because it's showing incongruency to the market. One is leading the other, and we talked about that from a arbitrage standpoint. It's where it's that shifting back and forth, and usually that adds to volatility. It's just the reality of it, and not unexpected given the fact that things are pretty much stable but in flux, which is a contradiction in and of itself, but true, simply because you've got the whole Fed situation continuing to blow up. Now they're claiming a third one. The Fed members filed suit to stop being fired. And it's going to get worked out, but it creates an unease for the market because they see it as reshaping what the Fed is going to be and how it will look going forward. And everyone's trying to figure out what does that really mean. And that has implications. Simply for the way the Fed has been reacting, it reacted so different to much worse numbers in cutting rates, even when inflation was high. So now you don't have that. Oil proving that very cleanly, and you're also seeing the alterations with investment improving from a GDP standpoint, but government spending dropping. So yeah, it's not the model they prefer, but it's an alternative model, and again, it's pretty well established that the less government spending you have and the more private investment you have, the greater your growth rate is going to be. And as long as you continue to spend ridiculous enough to borrow, you pull money from the economy, and that just reduces growth. And you've seen this. Japan, you see it in Europe now, having gone on for a while, and then you look at the energy policies, and you can see where Germany is just in a nightmare zone. Oddly, though, people still want euros, even though they continue to express, and this is just their belief based on their economic models, that the U.S. is wrong. Well, that's an opinion for now. I mean, it will get resolved at one point or another, but when you see the negative growth from a eurozone to positive growth for the U.S., then you start to have problems of like, well, what is it that you're really valuing? From a gold standpoint, continues to rise because again, there's not going to be any change in deficits in that, and that's dollar devaluation. And it's interesting that crypto's trading again more with the Nasdaq. In fact, it's a bit more extreme from a Bitcoin, but as we've seen, that was a larger player moving money out of Bitcoin and continuing to sell, while then also switching into ETH, which is why you see the divergence, and fairly well documented. But it just shows that doesn't take much for those larger wallets to move the market, and that expresses a illiquidity that some don't want to talk about. But again, it gets back to the utility. The crypto always has to come back to how useful is it in everyday life. And while it's expanded some, it's been very slow in adoption. Now, beautiful thing here, you break it to the new highs, and then boom, it takes one candle in post market to fill it all back. And this is where your call buyers get slammed. They'll open up, and everything will be wiped out by the time the open happens. And that's just how the market does it. You can see from a DOC standpoint for the 50K, a diversion to the daily, in the sense that we had a sharp move midpoint of cyan rejecting green as we were still making new highs. That's a gift right there, and then it's just a matter of waiting for that magenta to break down, and it did so just right before this bar that's currently in place. Pretty clean. So intraday, all those call buyers looking so fantastic, thinking they have the market in hand, and then you go here from the Asian session to the European session, and yeah, it's all wiped out. It doesn't look like it's building back anytime soon before the open. So again, all that gamma and everything's going to be wiped out, and that's the way the market works, mean reversion. So fairly clean, but we're getting close to the end of month, and everyone's going to be rebalancing, preparing for everyone to be back from holiday breaks, and of course the holiday will sort of signify the return of everyone back, and we'll go from there. As always, do anything relevant, I'll put the Skype chat and be ready for indicators for September, so that you'll be part of the action. As always, trade well. Have a good one.